Fewer renters are making their payments here in the Bay Area. What does this mean for real estate prices, and the Bay Area housing market? Coming up on the Silicon Valley Snapshot. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the second week here in September of 2020. It's been a few weeks and we've had some time for the August data to come in. And before we get into that data, fresh off the press, if you are a home buyer in today's market and you are looking for a property and want a very comprehensive data set for the particular neighborhood or zip code that you're looking in, go ahead and text the word data plus the zip code or the neighborhood that you're looking in, and we will get you a data set very similar to what you're seeing here, except for the community that you're looking in, for the property type that you're looking in, etc. And if you're a home owner or a home seller in today's environment and you're looking to make that next step, looking to move on, and you want the best pricing strategy possible, you want all the data, all the information available to you to make the best decision possible for pricing your property, go ahead and text the word data plus your property address, and we will get you the most robust, comprehensive data set that you're seeing here, far greater than what you're actually seeing on this video today. So let's start with the Santa Clara County numbers, everyone. You'll see that pendings and inventory are fairly similar right now. There was a drop in sales from July into August, but still month to date, year over year, there is a shortage of inventory and a 24% drop in active inventory right now versus a 58% increase in residential sales year over year in Santa Clara County, meaning that there's over a 75 point spread. It's 85 point spread in terms of how we're looking right now versus how we were shaping up at this time last year. And if you remember, the fall market in Santa Clara County was a very strong, very healthy market. And with the numbers this much more in sellers' favor, you can only imagine the kind of carnage that buyers are going to experience if they don't have the right strategy in place going into their offer. So that's Santa Clara County, and that's not even the hottest county out there. There are many counties out there that are much hotter than Santa Clara County. But let's move into the next. Get my iPad will just stop doing dumb things. So now we're looking at San Mateo County. The San Mateo County numbers are a little bit more in buyers' favor, but still, it's quite shocking, honestly, when you look at these numbers. Month to date, okay, year over year. We are, so basically from September 1st to September 9th, think about this, of this year versus last year, pending sales are up 100%, meaning that the velocity of the market these first 9 days in September is drastically higher than it was at this time last year. So it means the market's really taking off right now in San Mateo County. We'll see how those numbers shape up. But looking back into August of last year, we had a 32% increase in pending sales year over year in August and a 40% increase in active inventory, which means that inventory and demand kept up fairly similarly, with demand trailing back just a little bit. So compared to last year, the market was just a little bit more favorable for home buyers at this time last year, for home buyers this year as opposed to this same time last year. That's what I meant. So that's San Mateo County. We roll on into San Benito County. And what we've been experiencing in San Benito County, if you've been watching these videos for any period of time, is kind of that surge in the massive surge in demand. And we're starting to see it come down just a little bit, but still inventory levels are trailing pending sales, which means that right now, in August of this year, there's 79 homes that went pending, 67 that were on the market. So the absorption rate is still over 100%. And when we look at what the velocity of the market is doing in these first 9 days of September, 188% increase in pending sales, meaning that there's almost, my goodness, there's like 3 times as many homes on the market right now 3 times as many homes pending right now than there were at this same time last year. Crazy. And a 45% drop in inventory levels. So if this velocity keeps up, I mean, you can anticipate a very, very frothy fall market for home sellers in San Benito County and San Mateo County. It's startling to think that even the apocalypse and a Blade Runner type environment, I don't even know what's going on outside, everyone, but nothing seems to be slowing this market down, except if you're in San Francisco. San Francisco, if you've been watching my videos, I had a few weeks ago, I made a video, the San Francisco real estate market coming to a screeching halt. And that video has performed exceptionally well. And I believe the reason why there's so many people interested in San Francisco is because it's been this real estate mecca for so long. This really ties into the theme for today's video, which is why San Francisco is struggling so much. It's been a mecca, but it's been a mecca for investors who actually rent their properties out to renters in that, millennials, whatever, in San Francisco. And so it's been this hub, right, for so many people, it's been this real estate mecca for so many years. But the rental market has propped up that market for so long. And now that we're in this situation where people are not being forced to go into work every single day, people are reevaluating their options and they're moving either into a more suburbia type environment, i.e. the East Bay, which you'll see in a second here is doing exceptionally well, or they're moving a little bit further south, i.e. San Benito County, which is why San Benito County is doing very well, or they're moving out of the area entirely. Interestingly enough, there's this article that was published by the San Jose Mercury News. It says coronavirus economy, Bay Area real estate bankruptcies begin to surface. It's really sad to talk about, and I hate discussing this sort of thing, but it's worth mentioning. I mean, there was one in El Cerrito, another complex in Milpitas that went belly up. There are a lot of units right now. There's a lot of complexes, condos in particular, some apartments as well, that were under construction or in the process of being built that are going through some sort of bankruptcy. And obviously, you absolutely hate to see it, but it's worth mentioning because right now the rental market is weakening in the Bay Area. It's weakening every single day. Okay, and as long as the rental market continues to weaken, as long as we see that trend, right, I think that it's important for people to keep aware of it and maintain their eye on that, because eventually it will start to affect other prices here in the Bay Area. I'm not saying that it's affecting everyone just yet, but San Francisco is the preview, right? And if we continue to experience this coronavirus economy for say years, right, as some people anticipate, I definitely think that more and more investors who lose renters, right, who lose tenants, will begin to lose their shirts. And that will put pressure on them to sell. And if we see enough of those, right, we could definitely see some sort of surge in inventory that's great enough or drastic enough to put downwards pressure on prices. Not saying that that's going to happen, but what's happening in San Francisco is a preview. And it's a reminder that we are not invincible. I like to talk about it all the time, how amazing Silicon Valley real estate is. And if you watch my videos, you'll know how bullish I am on the Silicon Valley real estate market in general. But these news stories, the fact that renters down 9%, the number of renters who have paid over the last month is diminished by 9%, down to 83%. It was at 91, now it's at 83, or 92, now it's at 83% of renters that have made their payments, meaning that 10% of the market is not paying, and that was paying, right? That's a lot. That's a lot of tenants, and if that number continues to increase, right, we could definitely see that putting pressure on investors to sell, hence putting downwards pressure on prices. But I am still optimistic. I'm still very optimistic that we will see this through and that the worst has already passed. However, pay attention, because if this continues to be a trend, then it's definitely something that we're going to have to take into consideration when making predictions if we continue to see these trends, like I said, continue. Anyways, back to the numbers, everyone. San Francisco doing abominably. Obviously, the number of homes for sale is drastically up, but so are pending sales. Pending sales are up 62%. So there's still way more buyers in San Francisco. It's not like the buyers have dissipated or disappeared. It's just that there's so many sellers who are selling for two reasons, right? The rental market has dissipated. A lot of investors, homeowners, or property owners that own investment properties are seeing their tenants leave. They therefore want to liquidate and leave the area as well. And then you got a lot of people who are selling their properties, their little tiny townhomes and condo shacks in San Francisco, and they're leaving it for a much larger home in either Contra Costa County or Alameda County. Now, if you look at Contra Costa County, it is white hot. Pending sales are outpacing inventory significantly. In August, they were up. We had a 26% increase in pending sales and a 36% dip year over year in active inventory. And we had nearly a 30% delta between inventory and pending sales. The absorption rate is way, way high in Contra Costa County. And that same effect is being mirrored in Alameda County. The exodus effect is also impacting, I believe, Alameda County, where we're also seeing pending sales outpace inventory. 1268 versus 1112, about 10% increase or a 10% delta between the number of pending sales and the number of active inventory, and the velocity of the market is just not slowing down. In Alameda County, you're seeing pending sales up 37% year over year, month to date, and up 59% in Contra Costa County, month to date, year over year. I know that's a lot to comprehend, but basically the velocity heading into this early fall market, right? I really consider September 1st, after Labor Day, is kind of that peak fall market, and we experience, from Labor Day to Halloween. That is really the time frame of the peak fall market, and we're right at the precipice of it. We're right at the start, and it's fascinating to see these numbers, because all this is telling me, and all this should be telling you, is that the fall market, as long as you're not in San Francisco, for Silicon Valley real estate is going to be a doozy. Once again, everyone, this is Danny Gould. If you are a buyer in today's market and you are looking for a very comprehensive data set for the area that you're looking in, go ahead and text the word data plus the zip code or the neighborhood that you're looking in. We will get you a data set very similar to what you're seeing here. And if you're a home seller looking for the right strategy, looking for the data to help you create the right strategy for your property, go ahead and text the word data plus your property address, and we will get you a very comprehensive data set for your particular property. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and we'll catch all of you in the next video.